What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit notification bell so you don't miss future videos. So I want to discuss monthly dividend stocks, specifically REITs. And there's three of them that come to mind that run circles around AGNC. So people say, well, AGNC isn't a REIT and blah, 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 blah. Guess what? They're a REIT. Their revenue hasn't done well and their dividend growth is terrible. So I'm going to go over that with you guys first. And I'm going to show you three REITs that run circles around them. I own two of these REITs. I'll tell you during the video which REITs I own that run circles around AGNC. So if you're new to this YouTube channel, make sure you subscribe and hit notification bells, not miss future videos. Smash that like button. Let's check out these three REITs right now. So first, let's look at a stock analysis of AGNC Investment Corp. They're sitting at 974 and they have decreased over time. During the pandemic, they have done terrible. So at their peak, they're 1934 and now they're at 974. So the pandemic's been over. It's been 5 years. They have not recovered. Now, I've been going after REITs because they have not recovered very well with the pandemic. And believe me, it's been great. Now, AGNC has some subsidiaries, but the most important thing is if you're going to say that you're a really good REIT, I want to see some revenue trends. I want to see some dividend growth. I don't want to see dividend cuts. And you see the dividend yield at 14.78%. That should be a red flag. Now, I own Arbor Realty Trust. They seem to do very well. So their trends have been good. Their dividend's been good. Their price per share has been pretty solid. I've been buying them. But with AGNC, there's some issues that I'm going to go over. So annually in millions US dollars, here's its revenue. Okay, 2013, 2,193, 2014, 1,472, 2015, 1,466, 2016, 1,321, 2017, 1,293, 2018, 1,949, 2019, 2,842, 2020, 1,519, 2021, 1,361, 2022, 1,590. And then you go to 2023, 2,041. So again, 2013 to 2023, there's not been really any revenue growth. And remember, with real estate investment trust, MREITs, REITs, 90% plus of what they make go back to investors. So they're stagnant right there with revenue. So you're not going to see usually dividend growth or funds for operation increasing with REITs when the revenue is kind of stagnant or decreasing. Let's jump to the dividend history. So when it comes to dividend stocks or REITs, always study the dividend history. So starting in 2016, the monthly dividend was 18 cents. Now that's pretty nice. Then we start seeing some changes. So 18 cents. Then in 2019, it dropped to 16 cents. 2020, it dropped to 12 cents. You can argue the pandemic. That's no brainer. Pandemic. 2020, 12 cents. Stagnant at 12 cents right there. It has not increased. 5-year dividend growth rate, negative 3.07%. So it's a high yield, 14.85%, and it decreased its dividend. And if you bought one share, you made $1.44. So it doesn't make sense to me to buy them. So I'm going to show you three REITs that are way better and have excellent dividend growth. One of them's a little bit slower though, but these two have excellent dividend growth. We're going to go over that as a REIT. This one I want to go over is Realty Income, 57.45 it's sitting at. Now, the average volume is 4.79 million. The market cap is 50.28 billion US dollars. Look at this price, 57.45. It has not increased since the pandemic. That's very attractive for me. And like I said, I'm going after the real estate sector and financial sector because they've been down. Dividend growth has been pretty nice for Realty Income. Despite their stock price, their occupancy rate is very good. And I'm going to jump to their revenue trends. So I always say the trends, the trends, the trends. Realty Income annually in millions US dollars, 2013 780, 2014 933, 2015 1023, 2016 1103, 2017 1215, 2018 1327, 2019 1488, 2020 1647, 2021 2080, 2022 3343, 2023 4078. Now my goal is to get to 200 plus shares of Realty Income. Their occupancy rate, they're a really good REIT, and they're called the monthly dividend stock for a reason. I don't want to go too in depth with them. I've done numerous videos, but I just want to show you the basics with REITs. It's very simple to understand, funds for operation and revenue trends. It's very simple. Now, the dividend growth isn't always as good compared to dividend growth stocks like Lowe's or Home Depot, but let me show you the dividend growth rate on Realty Income. So again, ladies and gentlemen, study the trends. Look at Realty Income. So 2016, 20 cents quarterly dividend. 2017, 21 cents. 2018, 22 cents. 2019, 23 cents. 2024, 21 cents. 2022, 25 cents. 2023 is still at 25 cents, and then it goes to 26 cents. All right, we're at 26 cents, and we're hopefully going to crack 27 cents. So there is dividend growth in 5 years, 3.04%. The number of dividend increases in the last 5 years is 23. About one share, you made 316 with a 5.51% dividend yield. Now you see what I'm talking about. Look at the trends. It's simple. I mean, you have to be a little bit more in depth, obviously, know what you're getting yourself into and do your due diligence, but consistency is key. Revenue trends, dividend hikes. That's that simple. Usually with REITs. Now let's jump to the next REIT. And yes, I'm going to classify Stag Industrial as a REIT that's way better than AGNC, sitting at 36.48. Now it's not doing too hot against the S&P 500. The average volume is 1.08 million. The market cap is 6.65 billion US dollars. Year range is 3409 to 4163. Its day range is 3618 to 3658. Previous close is 3612. Yes, I did say I'm going to buy Stag Industrial eventually. Let me worry about my M1 finance portfolio, and then I'll start buying Stag, because at one point it actually was doing pretty well against the S&P 500, and reality set in. They're sitting at 36.48. That's still not bad. The revenue trends and dividend history is pretty attractive as well. Let's check that out. So now we have to look at the revenue trends, and this is quite impressive. I'm hoping eventually there's going to be an explosion in dividend growth with Stag. Annually in millions US dollars, 2013 133, 2014 173, 2015 218, 2016 250, 2017 301, 2018 350, 2019 405, 2020 483, 2021 562, 2022 657, 2023 707. So a huge increase in revenue. Now let's check out the dividend history. I'm going to start in 2016. It was at 12 cents. It really hasn't grown at all. Still at 12 cents. But the difference is it has not cut its dividend. It has dividend increases in the last 5 years is 5. Very small, minute. Look at the dividend growth in 5 years, 0.69%. That's like, I don't even know how to describe it. Like, how would I describe it? Kind of like Northwestern football. Maybe it's just maybe up at times, but not really. Dividend yield is 4.10% or 4.10, 4.10%. And if you bought one share, you made 148. I got all this noise in the background. I'm trying to do this video, so bear with me. So let's jump to the final REIT. And to this day, I'm very surprised that Agree Realty Corporation is way more than Realty Income. sitting at 76.45. It's not doing too well against the S&P 500. That's attractive for me. Hopefully it stays a little bit less than real, or it goes to being less than Realty Income. I don't understand that it's more expensive than Realty Income. Realty Income's way bigger. And if you want to compare Big Ten football, Agree Realty Corporation is kind of like Michigan State in football, and Realty Income's like Michigan. Like Michigan's been a consistent program, like winning, but the little brother is winning right now in price. I know Michigan just beat Michigan State, but past few years, Michigan State has had Michigan's number, and Agree Realty Corporation has had Realty Income's number. They're like the same business model, same type of, the occupancy is fantastic. It's almost a mirror image of Realty Income. Now, I'm going to jump to the revenue trends and dividend history. Realty Corporation is quite impressive. It's still way smaller than Realty Income. I'm still baffled as to why the share price is way more than Realty Income. Love both of them. I own both of them. I don't own Stag. But annually in millions US dollars, 2013, 43, 2014, 53, 2015, 69, 2016, 91, 2017, 111, 2018, 137, 2019, 187, 2020, 248, 2021, 339, 2022, 429, 2023, 537. There's an increase in revenue. Now let's check out the dividend history. So I'm going to start in 2019. They were a quarterly dividend, then they changed their philosophy to being a monthly dividend. That put them on the map, to be honest with you. So you see 56 cents, 57 cents, 59 cents, and then they cracked to 62 cents in 2021, and then they became a monthly dividend in February. So 21 cents in 2021, 22 cents, 23 cents in 2021, then it cracked 24 cents in 2022, then it cracked 25 cents in 2023, and it cracked it's almost going to be 26 cents. So the dividend growth in 5 years is 6.01%. The dividend increases in the last 5 years is 11. It's way better. The dividend growth is better than Realty Income, which is surprising. Again, it's smaller too. If you bought one share, you made 304 with a 3.94% dividend yield. So I want to conclude this. I do not own Stag or AGNC. Stag is a little too slow for me for dividend growth. If they start growing, yes. If I see potential there, I'm definitely in. But if you look at Agree Realty Corporation and Realty Income, they're so much better. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. I will have a video for you tomorrow. Take care and have a good one, and I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money, so be aware and do your due diligence. It is best to seek financial advice from a financial advisor and somebody certified to give financial advice and somebody certified to give tax advice. So go to the financial advisor and tax advisor. Don't use my YouTube channel for any reference of that sort. This is strictly for entertainment purposes only. And as well as my Instagram post and social media post. You should take this as entertainment purposes only. You can lose money, so be aware and do your due diligence, and it is best to have a financial advisor, okay? And it is best to make smart decisions with your money because you can lose money when it comes to investing in the stock market. You don't have to buy things because I buy them. I just provide you my entertainment purposes and rationales. Take care and have a great Friday.